Welcome to the second session of the Work Incentives Training. I'm Brooke Lusk, and I'm the director of the South Dakota Benefits Specialist Network. We're excited that you've joined us, hopefully for the second time. Hopefully most of you were on for the first session on Tuesday. This session, like the first one, will be recorded, and the recording will be available to those who couldn't attend or those of you who want to watch it again. For those of you who are needing CESP credit for this training, you will need to complete the evaluation that will be sent out tomorrow, and you will get a certificate of attending the training. That will be a couple of weeks, so give us a little bit of time to get those sent out to everyone. And then I will just introduce our speakers for today. So first we have Bonnie Gusso. Bonnie has been a benefits specialist for over 6 years, and she covers the southeastern part of South Dakota, basing out of Yankton. And then Tara Boehm has been a benefits specialist since 2011, and she covers the central part of the state. Rhonda Erickson is our benefits specialist who is in the Sioux Falls office. She covers Minnehaha and Lincoln County, and Rhonda has been a benefits specialist for 9 years. And then we have Brad Knichny, who has been a benefits specialist for 6 years. He is located in the Brookings office. He covers the northeastern part of the state, areas like Madison, Brookings, Watertown, and Aberdeen, and Brad will be helping us with the technical aspects of the training. Today, the staff will cover Ssdi, Medicare, and also some information about concurrent beneficiaries. So I will turn it over to you guys. Thanks so much for joining us today.
All right, I will get the slides pulled up. Tuesday was all about SSI and Medicaid. And now today we're going to jump to the completely different disability program. And so, I joke about it, and it's kind of true. I say they may live in the same house or in the same office, but they're not friends. They don't get along all that great. They don't like to play nice in the sandbox sometimes. So, Social Security disability. As we talked about SSDI, you'll hear Title II when you call Social Security offices. This is the program that we've been having, since you've had your first job. You have money taken out for Social Security. And you have to have paid into the system to earn it, where SSI is needs-based. This is basically, it's like insurance. You have to pay for insurance in order to get the payout. So that's, when you're working, your money gets put into, I always tell people, picture that we all have our own little bucket sitting out in SSDI world, and money keeps going into the bucket. And once the bucket's got so much in it, if we need it, we can call on it. So basically what this is you've qualified for Social Security for when you retire, and now you need it just a little bit sooner. So as we learned yesterday, SSI looks at every kind of income. It doesn't matter if, it's from a job, if it's from a different program, if it's, you're supposed to, if you had a rummage sale and you made $500, you're supposed to report that to SSI. So for the people that are on SSDI, impact of unearned income, none. So here's a little bit of a list: alimony, child support, gifts, dividends, interest. Even winning the lottery will not have any impact on receiving an SSDI check. Think of someone really wealthy. Oprah Winfrey comes to mind. And, if something happened, she would lose her voice, right? Because that's how she makes her money, or she has. Anyways, she could draw her SSDI check, her Social Security early. So another example is I have someone that called me that is on SSDI, and the family farms, and her and her brother own the farm, or it was left to them. She does nothing. She does not do the books. She doesn't drive a grain truck. She doesn't even help them pick up seed. And so she's, but she gets a cut of the income. And so she was concerned about that, and that doesn't count. So, and assets, remember yesterday, there's that $2,000 resource limit. There's no resource limit. So basically it's all or nothing. It doesn't go up and down. You either get your SSDI or you don't get your SSDI. So, and this is a little bit of a change for some of you that have been doing this for a while. Wages count when they are paid unless proof is provided to Social Security. So we've always said that it's when you actually perform the work. That hasn't changed. What has changed is whose responsibility is it to point that out? And that has now come on to the beneficiary and those that help them. So Social Security, unless told otherwise, are just going to look at the date of the check and the amount. Now, possibly we need some of that money to go in April, and we need some of that money to go in May because they got paid the first week of May, but it wasn't all worked in May, okay? And so it's on us to, what I do, when I have the pay stub, I will write exactly how much of that paycheck should be in April, exactly how much of that paycheck should be in May, and I circle it with the most obnoxious highlighter I can find. So when they're going through it, it brings attention to it. So, you know, this is the trainings that we do. It's about work incentives, and it's about what work incentives do. It's a way to lower your countable income. It's no different than when we do our taxes. You know, we want to think of deductions that we can do that will lower our countable income. So there are, we call them phases. There's 3 phases. When someone qualifies for SSDI and they're returning to work, or they're getting a job for the first time. Everyone on SSDI is entitled to 9 trial work months. You'll see a lot of alphabet soup. You'll see TWP. So they get 9 of those, okay? But they don't have to be in order. There can be, April could be one, May isn't, June isn't, July is. They look at a 5-year period. So it's 60 rolling months. So I date myself, and I know a lot of you have heard this analogy, but think of The Price is Right, where it had the little yodeler that would climb the mountain, and there had that red thing that went with him. That's that trial work, you know, that 60 months it moves, and the 9 months must be within that time. So if one of the trial work months, say month number 1 is over 6 years ago, it's not gonna, it'll fall off. So I have a visual to show you this later, so don't get too hung up on that. Because I'm a visual learner. So, and then in order to use a trial work month, so it has to be at a certain amount. For 2021, that's $940. And you'll see where we always put gross. Social Security looks at gross wages for everything. So that's why tax returns and things like that never count against us. So just always remember with Social Security, it's always gross, it's never net. And then if someone is in self-employment, they don't look at the dollars earned only, they also look at 80 hours of work in that month. So that's 20 hours a week. You know, and so for self-employment, it may not be profitable, but if they are working 30 hours a week, but they only make $200 for that month, it's still gonna, you know, mark off one of those trial work months. And so it's not a bad thing. You know, we don't want someone to use up a trial work month if they're trying a job and they only make $100 and it didn't work out. I would hate to see someone, you know, use one of their 9 months for that, because during your 9 trial work months, you can make as much money as you want. Social Security doesn't care. It can be $1,500, it can be $15,000, and you will still receive your Social Security disability cash payment. So, and that's exactly, it's like what it sounds. It's to try working. So again, trial work period, not required to use them in a row. And then during that phase, you're entitled to keep your SSDI cash benefit no matter how much you earn. It does not matter how much you make if it's one of your 9 trial work months. A little more about the rolling 60 months. If all 9 months are not used, they start dropping off one by one. If 1 month drops off, right, you get one back at the other end. So during one period of disability, a beneficiary cannot have more than 9 trial work months. So that's kind of a big thing. It's not, a lot of people will call me and say, well, that was with my last job. I got a new job. And it's like, you only get 1 trial work period per disability case. So now there's that rare instance that, you know, someone's on disability, they medically improve, say 10 years down the road, they become disabled again, but in a different disability. That'll be a completely new case. So, you know, and there is, a person can get a second one, but it's very complicated. It goes through the, like, they worked off benefits, they got back on, they stayed under for 24 months. So in those cases, what I'm going to tell you is refer them to us, get to a benefit specialist so we can help with that. So here's a little bit of a chart for people that are visual, if that helps. So this is kind of what we look at with the calendar. So in this, we're saying that the person made over $940 in these months. So trial work period 1, 2, 3, 4 must have had lower wages in May. And hopefully you can kind of follow along and see this person would have used all 9 months in this year. So trying to go a little slow, but we'll come back to this. We, in our examples, cover this also. Okay, I know a lot of you have heard of this. We get a lot of phone calls and, hey, how much can I make? So, you know, that number, it's hard. We know there is a number, substantial gainful activity. It determines that amount each year, Social Security does. In 2021, it's $1,310. If you have statutory blindness as your disability, your SGA is $2,190. So just a little side note on that, a vision impairment doesn't automatically qualify someone as being statutorily blind. So they have very specific definitions for that. So just keep that in mind. You know, we always say someone can be legally blind, but not be statutorily blind. So we have great partners with SBVI, with the state. So, you know, we can help with that too. And then don't forget those IRWIs, those work incentives we talked about. What are ways that we can reduce that countable earnings? So that's why, you know, we hesitate a lot to say, oh, you have to stay under 1310, because a lot of times, you know, we use work incentives that someone can work more, but their countable income is less. So, and we'll get into that more too. Phase 2, okay, so we've talked about the trial work period. Trial work period, we don't care how much you make, SGA doesn't matter, none of that. What happens when you've used up that 9th trial work month? What's next? Well, phase 2, extended period of eligibility. So you'll hear us say EPE. That is a 36 continuous month period, okay? It's not like the trial work where it's rolling. Once it starts, think of a snowball rolling downhill, we're not stopping it. So once your trial work period is over, the next month your EPE will start. During that time, you're still connected to Social Security, but they look at your income. So if you are under SGA, which is $1,310 a month, right? If you're under that amount, you're eligible for your disability check. If you're over that month, you are not. But just because you go over 1 month, as long as you're in your EPE, they don't terminate you. So think of it as a water faucet. The water is still coming to the house, but so the water is there, but if you go over SGA, you don't turn the handle, you don't get the benefit. But if you're under, you do. So many of you know that Social Security does not work in real time. And so they're not watching every month to see whether or not a person is due that cash benefit. So then, hence overpayments. And Rhonda will talk more about that on Thursday. So, or Tuesday, next Tuesday. Today is Thursday. So anyways, any month, and it says any month which is countable earnings are over, you do not get to keep that check that month. And they do, you'll hear us, we talk about work reviews, we call them work CDRs. And so periodically, supposed to be every 3 years, but they have a hard time keeping up, and it's their workload, they don't like it any more than we do, let's put it that way. And so they're looking back 3 years, okay? And they're going to say, oh, well, you owe us back for this month, this month, this month, this month. So you can kind of get an idea of how those overpayments happen. Phase 3, cessation and grace. The first month after that trial work period. So can be in the EPE, anytime after the 9 months, because remember, we don't care what happens in those 9 months. Anytime they have countable earnings above that SGA, 1310 or 2190, that triggers cessation. Once cessation is triggered, automatically you get 2 grace months. So really, you know how you get those 9 months that you can make anything you want? So then with these 3 months, you can make anything you want. So technically you get 12 months in which you can have higher earnings and keep your benefit. So, but they are always together. So they're a package of 3. Once it starts, it's just those 3 months. So you're still going to receive your benefit for those 3 months. We'll have some examples and show how that works. Okay, so here's an EPE. It started, if you think of that last slide, right, their trial work month ended in December. So now year 1, 2, and 3. And at the end of EPE, if you're not over SGA, your benefits continue. After your 3-year EPE, the first time your countable wages are over SGA, your Ssdi will be terminated. That means your ties to Social Security will, your cash benefit will stop. So just keep in mind, after those 3 months, that's a safety net. They give you those 3 years to, again, ease your way back into work and see how it works and see how it goes for you. And then at the end of those 36 months, anytime after that is when you have to really keep an eye on that, because that safety net is no longer there. All right, so another benefit or another safety net, so to speak, and I consider this a work incentive. This is a good reason to go ahead and, if you can work full-time and work yourself off benefits, this is always kind of in your back pocket. So expedited reinstatement, EXR, you'll hear us say easy back on, but nothing's easy. It's just easier than some things. You must request your EXR within 5 years of the last time you're eligible to receive the cash benefit, okay? Or the last of the EPE. So, and we can help determine this. You can call Social Security also. But if within that 5-year period that you had worked off benefits, meaning the only reason that your cash benefits stopped was because of work, not because of medical improvement, but because of work, you can call Social Security and say, hey, because of my disability or I'm having problems again, I'm no longer able to work above SGA. Could you please restart my benefits? They're going to send out the paperwork. They also will send 6 months provisional benefits. Okay, so you request that. And then you can request that they start paying your benefit check again. You get that for 6 months. That basically says, Social Security, you have 6 months to make your decision on whether or not you're going to start this person's disability back up, or you're going to say, no, they no longer have that disability and they're not. Either way, you get to keep that 6 months of, or whenever they make their decision, okay? So it gives you that provision to receive benefits while Social Security is making that determination. And they use the medical improvement. So it's a little bit different than the first medical, when they determine whether or not you have a qualifying disability. They would just, you don't have to prove you have the disability, you just have to prove that it hasn't improved. Okay. It's hard. I can't see anybody's faces. I have no cameras. So I don't know. I see there's some numbers up in the chat. Let's go over the timelines of basically the phases that we just talked about. 9-month trial work period, 36-month EPE, and then that 3-month cessation and grace, and it can be during or after the EPE, and then the EXR, the easy back on, so that you can request that within 5 years of your disability check stopping. So, all right. Remember, you got to know the 2 buzzwords, I guess, I don't know what to call them, to take the survey in order to get your credit. So the first one is Buffalo. So those of you that know me are probably smiling and are not surprised. All right. I think this is a good spot. Rhonda, do we have any questions?
No, there aren't any questions in the chat box. So
Okay.
I guess people can unmute if they have a question.
I have some that were a direct message to me, so I'm going to answer. It says, if you have a child drawn off the parent's SSDI, does the parent receive less benefits when they retire? I have had this question asked of me. That is a very good question, and a lot of people think they do not. So there's a provisional benefit if there is a child that has become disabled before age 26. In that overview we talked about, they can receive off of a parent's record. Okay, some people call it DAC, disabled adult child. CDB is the new term, childhood disability benefit. There is, for anyone who has children, if your children don't have a disability, they can receive an amount while they're a minor, no disability or not. If someone has a disability, they can continue to receive off that parent's record for the rest of their life, or as long as they have that qualifying disability. So it does not, it's an extra amount. It does not affect the parents. What can happen is if there's more than one person or more than one child receiving off that record. So the provisional benefits for the dependents, maybe, let's just say it's $1,000. That pool of money is $1,000. Well, if there's only one, child with a disability going to draw off of that, that child gets the $1,000. If there's 2, they each get $500. So hopefully that helps kind of clear that up. And so maybe I touched on that. What are the criteria for a child to draw off the parent, or if they just get SSI? Basically, the criteria is, as soon as that parent becomes eligible, that child is eligible. And so we have it happen a lot. And, and if it's a higher SSDI amount, that person could lose their SSI. Now there's it's called the Pickle Amendment. Again, please be calling us and working with us. If you lose your Medicaid due to being eligible for this CDB benefit, there's a way to keep the Medicaid. So, and then it says, so basically the criteria, they have to have had their own disability benefit or disability determination. So they have to have applied for benefits. So a lot of people get confused because when they're younger and they're in school before they turn age 18, they're receiving money because they're dependent of either a parent who has passed away or who has started receiving SSDI or retirement. And so it gets a little bit, confusing there, but we can help with that. If you use your Social Security money for SSDI, does it lower the adult Social Security benefit? No. And I think, yeah, that's kind of the same question. So the parent's amount is the parent's amount. It's based on how much they've paid in and how many years they've worked. So whether or not you have a dependent, that does not come into play let's keep going. Remember we talked about, or I talked about a little bit ago, that we want to figure out a way to have less countable earnings. Just like all of us do, we have our taxes. What deductions can we take to lower that number? Same thing applies here. One of those is an IRWI. So if you joined us on Tuesday for the SSI session, Barry talked about IRWIs. You can also use IRWIs on the SSDI side of things. It's an impairment-related work expense. So it enables SSDI beneficiaries to recover some of their out-of-pocket expenses incurred as a result of their disability. They are subtracted from their earnings. And so again, by reducing countable income, IRWIs result in a decrease of that countable. And so that could bring them under SGA when normally they would have been over. So you can use your IRWIs to remain eligible for your cash benefit. And we'll do some story problems. So hopefully that can kind of give you a little bit of a real life scenario. How to get an IRWI approved? It's up to Social Security. They make the final decisions. A lot of times you'll hear us say, we usually don't say it is an IRWI. We say it should be, it could be, it may be, but we don't like to speak for them. So you have to get it approved by Social Security and then keep your receipts. And it will not be developed for you unless you're over SGA, right? Because you don't need it if you're under. And you don't need it if you're in your trial work because they don't care how much money you make. So that's how it differs a little bit. So I also, one of the handouts that I included, I apologize, today was kind of a huge handout and slide blast to you, but there is a form that you can use depending on the office you work with. They may require that. They may just need you to send in some receipts. I have seen where someone's diabetic supplies were $200 every month. After a while, Social Security, they really didn't make them send them in each month, but they do tell you hang on to them in case they ask for them. So here's some examples. What could be used as an IRWI? Medical appointment copays. If you don't have Medicaid, you probably have some sort of a copay. I know my insurance, I have a $25 copay. That could count. If you're paying money to go to a doctor, those copayments can possibly count as IRWIs. Prescription copayments, even those with the extra help with their prescriptions, can pay $2, $3, up to $8. And so those count. Prosthetic devices, IRWIs. Certain transportation costs, this one every year gets kind of confusing. It has to be specialized. Public transit that's open for anybody to use is really hard to get through. And more, I see us having trouble with transportation costs, unless it is specific, like paratransit that comes to your door, and you have to pay them because you can't use any other kind. A lot of times we can get that to go through. You live out in the country and you have to pay a taxi because there is no fixed route or in-town public transit system. So we'll talk about that more with the examples. And then cost of adaptive devices for motor vehicles. So, hand controls for someone who, whose disability involves them being in a wheelchair. Now, depending on the cost of it, you may want to, like when you can depreciate the cost. So if it's a very, very large, expensive item, they will prorate it out and, take so much a month until you've used up the value of that. Oh, yeah. And then, like we said before, we don't need these IRWIs unless we're working over SGA. Here's an example. Mary works and she earns $1,350 a month. However, she pays co-payments on her medications of $80 a month. Mary's countable income it's $1,350 during her trial work because she can make all the money she wants. So this would definitely count as one of those trial work months. If it's after the trial work, now we're looking at, is that over SGA and are there any deductions we can take? Well, she told us that she has $80 a month in copays, and we're just going to go with Social Security already approved this. And so if you take the $80 off of her countable income, it now comes to $1,270 under SGA of 1310. So because of this IRWI, she's not over SGA. She'll continue to get her benefit. And so she continues to be qualified. All right, so that was IRWIs, one of the work incentives. Another work incentive, subsidy and special conditions. I like this one. Support received on the job that may result in you receiving more pay than the value of the service. Subsidy is support provided by the employer, which is extra breaks, more time to finish, a little extra help. Say there's someone that, spends more time with you, or you work with a buddy or something. And then special conditions, they're the same thing. The difference between the two is who's paying for it, who's providing it. Something provided, a special condition is something is provided by someone else. So VR is paying for the job coach, or, that's probably around here. That's probably the most used one. So, and what it is, I think more and more employers are seeing the value of employing people with disabilities. They are, I guess, in my experience, some of the most loyal, hardworking. Maybe they're not as fast. So, we can put a value on their work. So say you have someone that runs a machine at a manufacturing plant that does not have a disability, that is able to do X amount of parts a day. And then right on the machine right next to him is someone with a disability that maybe does 3/4 of, does like a quarter less. We can put a value on that because they're probably getting the pay they should be getting paid the same. You can't pay someone with a disability less. That is against labor laws. That's a big no-no. And they can't refuse raises. You can't not give them raises, even though they come in and ask and go, I don't want a raise because then it'll be over SGA. It's a big no-no. So anyways, we can put a value on that because guess what? They show up every day. They take less sick days. They are dependable. And with the unemployment numbers right now, that's a huge boost. And that's a great reason to be working with employers about employing folks with disabilities. So, and then, a lot of times we don't think about it. I call it natural supports. Someone that just naturally helps someone. A lot of times we have to have a conversation to start figuring out those natural supports that aren't just completely obvious, but if they went away, the person wouldn't be as successful. So let's do this example together. So Bill, for this example, Bill has finished his trial work. He's earning $11 an hour and he's working 30 hours a week. Okay, so quick, if you look down below here on step 2, you're going to notice that when we do averaging or when we do estimating for these things, so $11 an hour times 30 hours a week, you get $330. Then we are instructed by Social Security, this is how we've been taught, you take that times 4.33. The reason they do that is if you are paid every 2 weeks, there are 2 months a year that you get 3 paychecks, okay? So just taking that times 4, we would be under evaluating that. And then if you're weekly, there's 4 times a year you get an extra check. So Social Security said, in order for us to kind of pick that up, we take it times 4.33. So for this example, her monthly gross earnings are $1,428.90. 16 hours a month of support on the job from the employer. So that means that the employer is paying a person to help him. But the value of that help is Bill's wage per hour. We don't know, nor do we need to know what that other employee is being paid. So 16 hours a month times 11 hourly wage of the worker is $176. Now, for a month. And we didn't have to take it times 4.33 because we know how many per month. It didn't say per week. 1,428.90 minus 176, because we put a value on the support that they received. Now look, instead of counting 1428, we're counting 1252 below SGA because of the subsidy. He's below SGA and nothing, it does not interrupt his benefits at all. When can I use them? Not during the trial work. That's the big thing, because you're like, yeah, Bonnie, you've already told us that, but that gets kind of confusing. They do apply anytime that the Social Security office is making determinations. So they could apply, say you apply and you are working, but that initial eligibility, they're looking at that because there's two ways to qualify, two things you have to pass to qualify for SSDI. Number one, well, you have to have paid in, or someone that you're connected to has. Number one, they have to determine that you have a disability that matches their definition. So once that's done, then they look at your income. They look at the financial side. If you're over SGA, you are not eligible. You cannot become eligible for SSDI if you're over SGA. But if you have subsidies and IRWs that'll bring that under, that can help with your eligibility. And then that grace period, that cessation and grace, those 3 months, those are kind of like, think of those like trial work. They don't care how much you make. They do, or they don't care how much you make, but you can use them, sorry. So after, and we'll use an example of this. So you don't have to trigger your cessation in those 3 months to start if we can get you accountable under SGA. And then the EPE, remember, we're saying if you're over SGA, no money. If you're under SGA, you get to keep your money. Well, here's a way to get them under SGA so they don't have to pay that month back. And then they can look at it if you've applied for an EXR, for that expedited reinstatement. This one I've actually lately haven't seen it much, but have had a few. Unsuccessful work attempt. An effort to do substantial work in employment or self-employment that discontinues or reduces to SGA, or say you're making over SGA for a couple of months and all of a sudden it just stops because the job just didn't work out. And it can't be more than 6 months because of and it has to have stopped because of your impairment, or maybe a special condition went away. And we can have that count as an unsuccessful work attempt, and then it'll erase those wages for those months. So they're not going to count towards anything. So like I said, it has to be a very short-term employment history. And when it says here, the removal of special conditions, that's a thing because management changes. Maybe you have someone that you're working with employed somewhere that just has those natural, wonderful employment supports. That manager gets promoted to a store in a different town. In comes a new manager that's not so disability friendly and says, no, they have to do this, this, and this just like anybody else, no extra help. So, that can consider that we can ask for an unsuccessful work attempt. Again, with all of these, we don't expect you to know all of this. We do not expect you to be able to do what we do. We want you to be able to recognize these things and know when to call a benefit specialist, when to refer, when to pull us in. All right, so stop. You're always going to see this. Remember, report income every month. So with SSDI side of things, with SSI, report every month, because if not, it's not if you get an overpayment, it's when you get an overpayment. Some of the offices are telling people, we don't want your pay stubs unless you're over trial work. I've even had some offices say, wait till we do the work review and we'll ask for them all at once. Or remember, Tara talked on Tuesday about someone that receives both benefits. and you are turning them in for, you're turning your pay stubs in for SSI. So you naturally assume that Ssdi is also seeing them. Not true. You could be like, I've turned them in every month, but here comes your work review saying I need your last 3 years of pay stubs. So then you're like, wait a minute, I already sent them in. Always, never ever give them your only copy. Always save a copy so that when they ask for them, and a lot of times work reviews, so, you know, I know everyone's used to working with a local office, but with the workloads, and sometimes that computer system, wherever it's at, triggers a work review. It may come out of Baltimore, it may come out of Texas. And so those people are not going to be as familiar with that file as, say, someone in the local office. And so always save a copy and be ready to send them in with the work CDR paperwork. So I am going to stop sharing my screen. And
There are some questions, Bonnie. There's a couple of them.
okay.
I can read them out loud, or you can.
Yeah, that would be
read them.
great.
So one question from Charlie was, if a child receives a child benefit from a parent who receives retirement, does that child benefit stop at age 18?
Okay. Yes or no. You got to love Social Security. I said, I've hated the words "it depends" ever since my training, because every question I ask, well, it depends. And I like yes or no answers. So if that child is just, if the parent is receiving and their child does not have a disability, and it will stop at age 18. However, if that child is still in high school or still attending school, there is a waiver. You have to ask for it, but there is a waiver that you can submit, and they will pay for 1 more year up to age 19, as long as they're still enrolled in school. Because anymore, and you know, our individuals with disabilities are probably still gonna, you know, they're not gonna be done before age 18. I held my son back and he wasn't done till he was almost 19. So, you know, it's just every situation is different. Now, like I said, a lot of people get confused. In order to receive after that benefit, after that age 18, because that's just called a survivor's benefit or a dependent benefit. That is not anything disability benefit. In order to receive that childhood disability benefit or that DAC, the child has to have had a disability determination. So they have to apply. Social Security needs to determine that, yes, you have a disability, so you will continue to receive. And I have had some parents that this is something they don't know, you know, and as parents, we kind of get worried, you know, we have a child with a disability and that they're not going to be able to take care of themselves. And so what happens is, you know, when that parents are so relieved when they find out that after they pass on, their child is going to continue to receive off of their record. You know, it's, to me, it's such a, it's a nice feeling, and parents are usually pleasantly surprised to know that that money will still go to their child. But like I said, in order to receive off a parent's record after age 18, they have to have their own disability determination. That's probably the biggest thing that we run into that gets confusing. So,
okay, Bonnie, we have another good question from Carson. It's about the subsidy. He asks, with a subsidy, is the employer still paying the full wage or the wage after subsidy?
No. That's why it's the individual gets their full pay. The individual gets their full pay. So, like I said, it is not okay. No, anyone with a disability should not make less than anyone doing their exact same job. And so that's a really good question, because that can get confusing. So the subsidy amount is just for our use or Social Security's use to try and get that countable wage down. And then just when we do our case studies here, our case scenarios, we'll go into, you know, how much do we use? You know, do we use $11 an hour, $12 an hour? And And we'll talk about that. So
And we have
hopefully I
another-
answered that. Okay.
We have another one from Sarah Tash. Hi, Sarah. So she writes, I work at a community support provider and we are rep payee for several of the individuals supported. For the individuals who are receiving SSDI and who are employed, we haven't been submitting pay stubs to SSA. I was told from previous coworkers that we don't need to. What I'm hearing from Bonnie is that we should be submitting their pay stubs monthly, just like we do for those who receive SSI and are, I'm sorry, I have to scroll down, and employed. Is that correct?
Okay. Sarah, by that question, that tells me you are in the Sioux Falls area. Am I correct, Rhonda?
She is.
So Sioux Falls has been saying that. You know, when you look at a town the size of Sioux Falls, can you imagine how many thousands of pay stubs they would get each month? And so, yes, some are now saying, do not submit pay stubs until we ask for them.
Well,
That makes me
hearing-
nervous. That makes me a little bit nervous because I do hear that they do want them if you're over trial work. Go ahead, Rhonda.
Here in Sioux Falls, even if somebody hands them in, when it comes time for the work activity review, they
Yes.
will ask for them again.
Yes,
And
'cause
you
they
just
want
never
them-
know if they're gonna go in and put them in the file, or you never know if they're gonna put them in.
Yep. And that's why you
So,
should never give them your only copy.
yeah, even if you do mail them in, keep a copy because you're probably gonna have to mail another copy, all of them in with the
Yep.
work activity review.
Because it might be a different person. Might be a different person that's doing it. So the sticky part is I know that the offices are telling you that. But if you ever read a Social Security letter, right, all 9 pages that tells you what you need to know in the first paragraph. So Social Security letters are so scary sometimes because they come and there's so many pages and most of it's just all lawyer talk. Let's be honest. Usually in the first couple of paragraphs, if someone could start reading it to me, I can help with that. But if you read in there, it says you're required to report monthly. For SSDI, they're really starting to go with over trial work, you know, and what I like is what I tell people is when you refer someone to a benefit specialist, we work on a trial work chart with them and we can estimate, hey, this is when you're going to have used your 9 trial work month. So let's keep track of that. And then let's call Social Security and say, hey, do a work review. I've used my trial work. They'll be like, oh, okay. Because the sooner we get them to make that decision, because remember, I can estimate what month that is, but we need them to put it in black and white. Then we know where's our EPE start? When can we start using work incentives? When do IRWs matter? When do subsidies matter? That timeline has to be determined by Social Security. And so a lot of times it's on us. They are not watching that. They are not looking to see if Susie has used up her 9 trial work months. They just simply cannot do that with their workload. They do get yearly IRS reported wages. They'll divide them kind of by 12 and they're supposed to be looking at them. And if it's really high, sending out a work review. They will tell you they do them every 3 to 5 years, but like I said, if someone is annual IRS reported earnings are never $1,000, you divide that by 12, they're not going to do a work review. They should, but they're probably not. And I just saw the other part pop up from Sarah. It says I have several that have work reviews every 3 years, but they'll ask for 5 years of pay stubs. So I actually had a 13-year one the other day. For some reason, this person's file had never been reviewed. We were able to call Social Security and say, listen, you know, they haven't worked. They'll just automatically put a date in of the last one. And if they can't get those pay stubs, that's when they go to those IRS reported earnings and do an average, you know, divide by 12. So we can figure it out, but yes, they will ask for back to 5 years. And I can hear a lot of you saying, and yet we sent them every month, but that they want them, they think of that as just a nice, neat package. You know, you have your work review paperwork and they want that pay stubs right with it so they can grab it and work on it. Rhonda, go ahead. I see you popping up.
Oh, no, I actually muted myself. I was
Oh,
done.
that's okay. So Rhonda works in the Sioux Falls office, and you know, we always joke about the Sioux Falls office, and we like to give Rhonda a lot of grief about, you know, our small town ones are so nice, but can you guys imagine the workload? I can't even. So I always say treat them kindly. I know it gets frustrating. I know sometimes they don't. That's what we're for. I always say, you know, we're hopefully getting a good relationship with our local offices, that they appreciate that we can kind of help in the meantime. Pull up one of your emails is 2021 SSDI case scenarios. You may, hopefully, maybe you printed them off so you can write along, or maybe write on scratch paper while we do them. I will get mine pulled up for you. All right, so while we are doing these, go ahead and unmute yourself and ask questions. I don't want to wait until like we're completely done with like all 3 scenarios and then have you have been confused way back at the first one. We do this when we do them in person too. Please unmute yourself, pop up, ask questions. So, all right, everyone's ready. Hopefully everyone can see this. I'll assume no news is good news. Number 1, and we did add that little note there. When estimating monthly income, multiply weekly wage by 4.33. Okay. Number 1, Jim is a 24-year individual, 24-year-old, I should probably say, individual who has been receiving SSDI for several years. In January of this year, he was hired on as temporary to help at a local retail store. He received 1 paycheck in February for $1,680, but it was for the last week in January and the first week in February. If he keeps track of his hours he works each day, how much will he get for each month? So 1 week in January, 1 week in February. So what I would, so it's 1,680. And for this purpose, we'll assume that it was the same amount of hours in each week. So you would divide by 2. So his earnings in January and February were $840 for each month. Did he use trial work months? Remember, for 2021, the trial work month has to be $940 or more. So no trial work months used. The good thing about that is, so if we'd have looked at when he got paid, now if you just send his pay stub in and Social Security sees a check dated for February 8th for $1,680, they're going to count that. That's going to be a trial work month. But when we send in that pay stub, we're going to highlight the pay period. And really great thing to do is keep a copy of a schedule, or if you kept a calendar and showed what you worked, attach a copy. Or the pay period may show clearly. So just draw attention to it. Because if we don't draw attention to it, they very well are going to count that all for 1 month. Okay, so that was 1A. Let's move on to 1B. Oh, I probably should have left it at 2020 since it's not December yet. So anyways, we're going to use 2021 numbers for this, okay? Jim is offered a permanent job at the store, and he's now earning $950 a month, beginning February 1st through April 30th. Then his earnings dropped to $800 May through September. October through December, he went back up to $1,000. Probably works retail, right? it gets busier that time of year. A lot of people struggle during the holidays with, especially if you work in retail. So list the months of his trial work period. Now, one of our favorite tools is the trial work period chart. This morning, I did email you out a blank one. So I am going to go ahead. I didn't do it to where I could just switch to it. I'm going to go to Jim. Here's how I would do it. So we take that story problem and we just sit down and we just start working the problem. So, okay, Jim's offered that store, and beginning February 1st, he's earning $950 a month. I put the $840 there because we did talk about in that problem one, but that wasn't a trial work month, right? So here's what I would do if you had referred Jim to me and said, Bonnie, can you help with things? We would look at his income and we would put it into our chart. So we'd first list out his income for 2021. And according to this, we knew that in May, June, July, August, September, he was at 800. So this is a good way to show that Jim used 1, 2, 3. These are below 940, so they don't count. And then he used 4, 5, and 6. So Jim has used 6 trial work months. Hopefully you are kind of following this. Feel free to print as many of those blank ones as you need. Let me know if you have questions. I'm going to kind of do the bounce around thing here. All right. So, is everyone with me so far? If I don't hear anything, I'm going to keep going. All right, so number 2. Dan is starting a job and he's going to earn $1,300 a month in gross income. He receives an Ssdi check of $800 per month. You find out he spends the following. Let's see. I should have changed that, guys. Let's presume that that's 1,400 because we need it to be over 1,310, right? But for this, we're not going to figure the amounts. Let's just go through the questions, okay? You discuss with Stan. So I sat down, I talked to Stan. We started talking about his work, about what he needs to work, because when we're talking to him, we're trying to identify, do you have any IRWs? Do you have any subsidies? So after visiting with Stan, he tells us, well, my transportation to and from work costs me $80 a month. Payment to have my neighbor wake me up every day I pay him $100 a month. My uniform dry cleaning is $60 a month. My internet service to access my work computer at home costs me $45 a month. And my medications cost me $150 a month. What follow-up questions might you ask about these expenses to find out more? Do you think they could be IRWs? Why or why not? So don't be shy if anybody wants to jump in. I'll give you a couple seconds to kind of think of what kind of, I've got some questions written down here, but. Okay, transportation, what would we ask? Well, is that public transportation? Are you just taking the bus or, Yankton Transit that we have here, or Palace Transit, I think is in Mitchell? Or is it a specialized? Is it paratransit? Is it transportation that's specifically geared towards your disability? So that's what we would ask them about transportation. Payment to have a neighbor wake him up every morning? Well, first I'd say why? Stan, why do you have to pay your neighbor to wake you up? Well, if his answer is, well, I don't know, I just didn't want to buy an alarm clock. Yeah, that's not going to fly. But think about it. Stan may share with you that, I think I'm jumping ahead here. But anyways, we're asking him these questions. So some of the questions I would ask: does everyone wear uniforms? Is the uniform due to your disability? Internet service. Do you only use that for work? And then medication co-payments, what are the medication co-payments? Can you work if you don't take them? It can get kind of confusing, and we always let Social Security make these decisions, but we always ask. Usually they say the medication has to be related to your disability. But even if it's not, if you don't take that medicine, then if you're not taking it, you wouldn't be able to work. They're pretty good about if you can just get something from your pharmacy and show this is what your expenses are in a month. I have had success with that, but it's always their decision. So here's the answers that we got. Stan takes the bus to and from work. There's transportation. He pays the neighbor to wake him up every morning because the medications he takes often cause him to fall asleep through his alarms or fall back asleep easily. He gets his uniform dry cleaned often so that his appearance at work is extremely neat because he fears having a mental illness is already one strike against him with his coworkers. Well, he purchased internet service to work from home as he often is unable to complete it on time at work. He has trouble concentrating in the afternoon because his medications make him groggy. His boss agreed that it was okay for him to access the company computer system at night to complete paperwork and submit it by the next morning. However, he also uses it for personal business. Netflix, Facebook, Hulu, was it Microsoft Live or whatever it comes with Xboxes. And then the one is medication co-payments are for medications that treat mental illness, and one is for high. Based upon this, what expenses are most likely to be IRWIs? Well, Stan taking the bus to and from work? Nope, because the bus is, you would have to know, is it for everyone or is it just related to you? So transportation is going to be no, that's not an IRWI. Paying the neighbor to wake you up? Yep. That's a legitimate medical reason. Getting your uniforms dry cleaned? Well, you would have to ask, is that uniform related to your disability or does everyone have that opportunity? More than likely, and his reasoning is just because he's worried about that stigma, but yet it's not required. That's not going to count as an IRWI. The internet service, that one's going to be a tough one to get through because I don't know anybody I work with that has the internet that doesn't use it for personal things. And anymore, they're going to say, if you have a dedicated home office and things like that, you have a chance. Again, don't just say, well, because Bonnie said she doesn't think so. Remember, we always ask. We let them be the one to say no. You never know. And then the medication co-payments are for medications to treat his mental illness and one for high cholesterol. In my experience, they have counted both because if his cholesterol is not under control, he's not going to be able to work because he's going to be pretty unhealthy. So, so don't, and like I said, we're pretty quick to say, oh, I don't think that will be one, but ask them. Always ask. I always tell my kids, the answer is always no if you don't ask. So hopefully, I'm not, all right. Any questions or anything before I move on that are related to this? Jessica, medical questions to ask. Updated prescription required for working. Are you asking about, oh, yep, those are the questions you were asking. Awesome. Those are very good ones. All right, so let's move on to number 3. Let's talk about Betty. Betty is an Ssdi beneficiary. She works and she gets $11 an hour, 30 hours per week. She contacts you in January and says because of her disability, she needs help with some of the tasks of the job. And so her employer is hiring a personal assistant to help her 7 hours a week. Love this employer. and the employer is paying that person $15 an hour. Remember, this is just for examples. What is Betty's countable income for Social Security, and does she have an IRWI or a subsidy? Okay, remember how we figure up countable income? So 30 hours a week times $11 an hour equals, oh, wait, we can't, equals 330. But then remember, we take that times 4.33. That comes to $1,428.90. Okay, so Betty's countable income right now, that's how we had to start with that, right? Okay, but the employer pays that person $15 an hour. Well, this is over SGA, so we're going to need a subsidy, or we're going to need some work incentive to get that below. Well, let's talk about that. The extra help is 7 hours a week. The value of that, though, is $11 per hour. Okay, we're not going to use the 15. Okay, because the value of it is the value of Betty's work. Okay, stick with me for a minute on this. So it's 7 times 11. We get $77. Now, that's weekly. We don't know monthly, since we took this one times 4.33. For our estimating purposes, we're also taking this one times 4.33. Okay, we get $333.41. This right here, that is the subsidy. This is the amount. So then what? Well, we get to take $1,428.90. We get to subtract the $333.41 for a grand total of $1,095.49. Of course it did that. Let's do this. There. Okay. I'll stop for a second, let you absorb that. So we just follow the steps. $1,428 is what we estimate her monthly wage is at. We found out the value of that person helping is $333. Well, we get to subtract that over SGA to under SGA. She keeps her cash benefit. Aha, but remember I said stay with me? Same scenario, but now Betty has to pay for her personal assistant out of her pocket. IRWI or subsidy? Yes, IRWI. So now, if Betty, I don't know any of us that would tell someone that's earning $11 an hour to pay 15, but it's still less because she's working 30 hours. Anyways, for example purposes, because Betty is the one paying this wage, okay? So then, you know, Betty's income is $1,490. I already did that math. Now we're going to take 7 hours times $15 an hour, and that gives us $105. We're going to take that times 4.33. That is going to give us $454.65. Hopefully you see why up here we got this amount and down here we got this amount. Someone else is paying this. It's not an expense to Betty. So when it's a subsidy or a special condition, it's based off of the individual's hourly wage. This right here, just think of this as an expense. Betty's writing a check. She's paying this out of her own pocket. Anything you are paying out of your own pocket, you take it. It's the actual amount you paid. So, and I'm not going to do the math. Obviously, she's well below SGA. All right. Oh, hopefully. All right, let's move on to Janice. Janice is an SSDI beneficiary living with MS. Her SSDI check is $900 a month. She tells you she worked last year and she knows she used 6 trial work months. And we're able to confirm this. It either shows up on our report or BBQI that we get. For some reason, we have verified this. She has decided to work for her friend as an office manager and receptionist. Lucky for her, her friend is very flexible about how many hours she works. She'll be paid $15 an hour. Janice is going to need assistance with filing and other physical tasks, about 5 hours a week. She is going to pay her daughter's friend $10 an hour to assist with this 1 hour after school. So she's paying 1 hour, she's working 5 hours. Janice already has medication co-payments of about $200 per month under her husband's. So we're going to go ahead and say, oh, right here, these expenses have been approved as always. So anyways, we already know all of this. 5 hours a week at $15 an hour. So let's jump down here. Beginning in January, she decides to try working only 5 hours per week. Her assistant helps her the entire time. Well, she used her trial work months. So first, we have to figure up 5 hours a week times $15 an hour equals $75, okay? Okay, times 4.33, $324.75. So this is what Janice is making, okay? We're not even worried about her helper right now. We're worried about Janice. She does $324. She's not using a trial work month. She's not using a trial work month. We don't need a subsidy. We don't need an IRWI. We don't need a reason to reduce her income. So not using trial work at all, because it has to be at least $940 in 2021. But what happens, move this up a little bit, no. What happens if she likes working and in March she increases her hours to 25 hours per week? Her assistant is with her 8 hours a week and she continues to work at this level through December. Will she use trial work period months? If so, what are they? Is grace period applicable? So first, let's figure out her income, okay? She's working 25 hours a week. We're going to take that times 15. That's going to give us $375. We're going to take that times 4.33. That is going to give us $1,623.75. Okay. Right away, my brain's clicking. I know it's over trial work and I know it's over SGA. So where are we at with that? Right. Then she's paying that person. So while we're doing the math, let's figure up if she's paying someone to help her, right? We already determined those are IRWIs. So her helper is 8 hours a week times $10 an hour equals $80. And if you take that times 4.33, you get $346.40. Okay. So this is just, we want to get these numbers figured out. March through December, she's using those. If so, what are they? You know what? When I'm looking at something like this, I want my trial work tracking chart. Let's pull up Janice. All right, hopefully everyone can see this. So remember, we already talked. This is what she was doing before. We knew, so I just kind of made these numbers up. We verified she used 6. Okay, so last year she used 6 of her trial work months. We got that figured out. All right, so by following that story problem, in March, she increases, we know she tried the 5 hours here. We came up with that number before, the 324. So I plugged those in. Oh, in March, she increased to 25. So we did that math and we came up with 1,623.75. Okay, let's pause there. We knew she had used 6. By putting things into this chart, we knew, oh, right here, over $940, number 7, number 8, number 9. Okay, now what? Trial work period is ended. Okay, now we want to pull in those IRWIs. Okay, if you remember, she had $200 in medication copays. Plus, we figured her assistant at $346.40. So we get to bring them all together. So she has deductions with work incentives of $546.40. That brings her countable earnings from 1623 to 1,077. Bingo, under SGA. Now, we didn't tell her she couldn't work over SGA. We used work incentives to reduce that countable. So no matter what, after you use your trial work, your EPE, it starts. That clock starts ticking, it doesn't stop. So if you look down here, I automatically know 36 months later, down here in May of 2024, EPE ends. Okay. So when you finish reading, it says in January, oh, and it asks about grace period. There is no grace period because nowhere are her countable earnings over SGA. At least not after the trial work period. So then, let's see. The rest of the problem says, or the scenario, in January of the next year, she has to stop working because her daughter has a car accident and will need assistance during the day. She reports this to Social Security. What will happen? Well, I know we've talked that the reason you quit working for an EXR to qualify to get back on has to be due to your disability. But in this case, January of the next year, she is still in her EPE. When you're in your EPE and you have no earnings, guess what? Check. Benefit status, check. That check will just get turned back on. Chances are it never got turned off, but once Social Security does a work review, they're going to ask us if we have any work incentives. And hopefully, if you're helping someone with a work review, you've referred them to us so that we can help with a work review too. So we can help with these things. All right. Whew. Just take it in chunks, but we do not expect you guys to do this. This is just to give you an idea. Rep payees, support people. A lot of times what I'll do is I'll say, keep this out. You know, these I'm just projecting estimated amounts. So keep this handy and fill in the actual or print out a blank one. I have been known to add a blank one to the back of the report for you to keep actual numbers because I'm just using estimated. Okay, so clear as mud or nah, clear as water. All right, questions. I have one that Heather sent to me here, Rhonda, I'll read it. I have a question about hiring an assistant to work at a business. How does this work for work comp and protecting businesses where an IRWI is concerned? For a subsidy, the business would be paying the person, so they would already fall under the work comp and taxes payroll. That would be yes, that would be a subsidy. Special conditions. So if you have a job coach, VR is paying the job coach and things like that. Whoever is paying them or whoever their employer is, they're worried. they're under work comp. So it's their employer. So I work for Black Hills Special Services Cooperative. And if I go out into, meet invoke rehab, I am covered for work comp by my employer. So
yeah, but in the examples, Bonnie, the person is paying them under ERIE. I can't even pronounce it. That ERIE.
Yep.
ERIE.
Yep.
So the person is actually the employer. So how, if you're trying to sell that or trying to creatively job carve for somebody, and that's a situation, what kind of information can we give the business or the person that's paying that ERIE?
Unfortunately, yeah. In that situation, we're going to tell them that you need to talk to a tax person. So for our example purposes, what we do that for is we like to show, the whole premise behind that is to show what hourly pay to use.
Right.
And
It's just
so,
an example of an ERIE.
Yeah.
I like the creativity side of it, and we come into a lot of creative job carving where that's concerned, but I don't know how to answer that, because if the person is paying the job coach to be there to fill in for some of the stuff that they can't do or whatever, and they're paying that wage, the business is going to be, what if they get hurt on the job? How am I covered? So,
right. And
so,
that is going to be,
realistically, that would only be probably a self-employment situation.
yes. Or
Okay.
the one who
I just wanted.
Yep. No, it's a good question. And I think Rhonda says it more than any of us, that if you want tax information, you don't come to us. So we always encourage people, in those kind of cases to be connecting with a professional, because the person that's receiving that money, if you really look at it, you're getting paid to do a job. That's self-employment for them too. So definitely, and there's, the waiver programs out there I have someone that I just got done working with at Family Support, pays 5 hours a week of job coaching, but just she needs some help 5 hours a week to do the job. Family Support is paying that, and they're paying an agency. So you don't have that problem come in because that person is already employed for an agency that takes care of all the employment side of that. So it is a good way. And sometimes you do have to get creative, because, sometimes you need just the right scenario for someone. So anyways, that is the case scenarios. I do have one more, but I'm going to wait until after we do the concurrent and see if we have time. It's one that it's called Bringing It All Together. So I'm going to have Tara go next with talking about concurrent and the people who have to follow both sets of rules. So go ahead, Tara.
Hello. Okay, so now we have to bring this all together. And now, if you were there on Tuesday, then Barry talked about SSI. And today, Bonnie talked about SSDI. So a person that gets both benefits, Title II, which is the SSDI, and SSI, is called a concurrent. So everything that Barry talked about on Tuesday and everything that Bonnie talked about today could come into play with a concurrent individual. I would advise you, if you get confirmation that a person is a concurrent, that you contact one of us, because there is so much that could be going on in their situation. So just when you think it can't get more complicated, some people receive both benefits, and they are referred to as concurrent beneficiaries. So an individual who receives a lower SSDI check and has little or no assets could qualify for some SSI as well. So how does a beneficiary qualify for both benefits? The disability definition is the same. So most people who qualify for SSDI have too much income and assets for SSI. But those that don't, SSI can step in if income and assets are low enough. The average SSDI beneficiary this year gets $1,277 in their SSDI benefit, if that's all they get. So even if the person has less than $2,000 in assets, any SSI check would be zero, because 1,277, even if you take out the $20 general income exclusion, is countable income of 1,257. That is above the federal benefit rate of $794, so no SSI eligibility. But if the SSDI check was lower, like let's say $400, and you took out the general income disregard of 20, the countable unearned income would be 380. That is below the federal benefit rate of 794. So you take 794 less 380 for an SSI benefit of 414. So the total income of an individual that just gets SSDI and SSI, no work income, the total should be 814. If it's less than that, then we need to contact Social Security and find out why aren't they getting the total of 814. And the federal benefit rate is always going to be, the amount is always going to be $20 more than the SSI rate or the federal benefit rate. So this year, federal benefit rate is $794. You add 20, that's $814. So a person that gets less than $814 this year, and you think they would qualify for SSI, you need to ask why they aren't getting it, or ask one of us to help you do that. The word for this session is, well, it's two words, blue jeans. And what about Medicare and Medicaid? So a person that gets Medicare and Medicaid is considered to be duly eligible. SSDI or an SSI or a concurrent beneficiary is eligible for Medicare after a 24-month waiting period. SSI beneficiaries automatically get Medicaid in South Dakota after they've been entitled to SSI for 1 month. So a person that gets Medicaid and Medicare automatically gets the Medicaid or the Medicare premium paid by Medicare. Excuse me, they get the Medicare premium paid by Medicaid. So the state pays for the Medicare premium because if they don't, they would have to give them full Medicaid. So if you think a person's getting the the Medicare premium taken out of their SSDI benefit and they get Medicaid, we need to ask why that is. And then an individual who is duly eligible, that means they get Medicare and Medicaid, they automatically qualify for the extra help, which help pays Medicare Part D costs. Anyone who is eligible for Medicaid or a Medicare savings program automatically qualifies for the full extra help. How does earned income impact the SSI, SSDI beneficiaries? So all the work incentives that we've talked about on Tuesday and Thursday today could apply to someone who receives both benefits. The SSD check is subject to all the SSDI work incentives and rules that Bonnie discussed. And the SSI check is subject to all the SSI work incentives and rules that Barry talked about. So you can see there can be a lot going on there, and there often is. All Medicare and Medicaid work incentives also apply. So Bonnie will talk about this in the next session, but the extended period of Medicare coverage can come into play, as can 1619B, which is a Medicaid provision. And that is all I've got. Does anyone have any questions?
There is one question, Tara, from Rhonda, different Rhonda. Her question is, can someone qualify for either of these programs if they are on short-term disability from work? This person is fighting leukemia.
What I would say that we would have to ask, but my first inclination is short-term disability would probably be considered unearned income. So it would depend on what the amount of that unearned income is. Assets and resources don't count against SSDI, but there are some special rules like for workman's comp and things like that. So I think it would just depend on the situation. And honestly, I don't know. So I would have to do some research and contact Social Security. But I would definitely think that if that benefit or if that income is less than $794, that it would be worth a call to Social Security.
And if somebody is getting the short-term disability, then unearned income isn't affected, or unearned income doesn't affect the SSDI. So they could definitely apply for SSDI for sure. Yep.
Anything else?
There aren't any other questions in the chat.
Okay. If somebody has a question, just either shoot me an email or put it in the chat.
All right, Rhonda, you are up.